All right, we're live. Welcome everybody. Welcome who's here. Hi Andrew. We're here with Andrew Adcock, who's the CEO of Crowd4Angels, a crowdsourcing platform. If I'm not wrong, he'll speak more on it, of course, I'm sure. And today. We're speaking on payments, regulations, and crypto as a regulated business. Andrew, the stage's all yours. Take it away.
Thank you very much. Good morning to everybody. If you look behind me, you can see it is morning in the UK. I'm in my London office. As Abhijit mentioned, I'm here today to talk a little bit about Crowd4Angels, payments, crypto, and regulation. We are a regulated company, and we have been since 2014. And unlike many of our colleagues or friendlier platforms, we have always been interested in the blockchain space. So let me just go ahead and show you a little bit about us, and then we can talk some more. So first of all, thank you obviously to Decentralize Hacks. I want my presentation today just to really give you an insight into a little bit about what we do, how we've, I guess, come up certain problems, and then to answer any questions. We are here to obviously collaborate and create and just try and create the financial world of tomorrow, because right now we're still in the very early days. And I think, 5-10 years from now, the work that people do here will obviously have a huge impact on how everyday mum and dads, interact with crypto. And maybe we'll even get away from the branding of crypto to something more like banking. So, yep, here's me speaking at a stage. I am the Chief Executive Officer of Crowd4Angels. I'm also a nerd, a proud nerd. I love my computers, rebuilding computers, and just generally playing around as much as possible. And I'm a fellow crypto hodler. I've been in crypto since about 2013 when I, got involved in Tor. And if anybody knows Tor, they'll know of the onion markets. And the way to really transact on Tor at that point was with Bitcoin and buying little bits of software via that method. If I knew then how much it would be worth today, I probably wouldn't have bought as much software as I did. So let's go ahead. This is Crowd4Angels, and as I mentioned, we are a FCA regulated platform. We support thousands of investors today, and we have companies looking to raise capital mainly from the UK and Europe, but as far afield as Australia, Canada. We've also supported an Indian project once before. A few little facts for you. So started in 2014, and that's when we started supporting blockchain projects. As you can see on the right-hand side was a little image that we did, and it was talking about Bitcoin in 2013 when the price was less than $250. We were the first regulated regulated crowdfunding company to launch a crypto payment gateway in 2016, and I'll come on to that in a little while. 2017, we did token sales, and in 2018, we launched an angel token, and by 2018, we also were doing what would now be classed as security tokens, so a token linked to a financial security. In our case, it was a bond. And as you can see, last year we also did a reverse ICO, which was an interesting model. It was taking an ICO token that was released in 2017 and turn it into an equity token. So that's a little potted history of Crowd4Angels and what we do. Now, I'm not going to go too much on this page. You can read it for yourself. But as I said, we're going to have a quick touch on regulation. I'm more interested in discussing making the jump from traditional to blockchain, real life user cases, and the sticking points. And then we'll just finish off with a very small part on security tokens. But as I said, I'm really keen on discussing the real life user case and why Crowd4Angels is interested in the blockchain field, but we also actively use it. So first of all, regulation. And as you can see from my image there, it really sums it up. Help. We're being essentially hanged by paper. Regulation, it's not clear. It's thousands of pages long, and it's forever changing, and it's different country to country. We're in the UK. I think we have a fabulously established regulatory framework. But, you only have to cross the border into France, and crowdfunding and its model is slightly different. And if we go further afield, to Dubai or Asia, again, it changes. I would say in terms of crypto, the FCA, the UK FCA, are slightly behind. They have been slightly hostile in more recent years. I think in 2017, they were very open to the proposition that blockchain offered. But in recent years, they're very concerned with scams and people essentially losing their capital. And, I'm sure we've all seen this promoted in the papers and things of that nature, but the banning of Binance. Now, there is a lot of confusion about what's been banned. Is it Binance.com or is it different entities? And I can, say crystal clear, it's a different entity. So it's not Binance.com. It's limited companies that are linked to Binance.com. But this isn't just here in the UK. You can look anywhere from Malaysia to, Italy and places of that nature. They're all looking at Binance, the largest exchange in the world, and they are banning it. And I think it comes down to a simple statement that I put down at the bottom here, is who is the client? And for many years, Binance really didn't know. They didn't know, you didn't have to go through a KYC. You could just register with a simple email, and you could withdraw up to 2 BTC without really any checks or balances in place. And I think as blockchain grows, that has to be addressed. And we are seeing, I guess, in the Western world, that being addressed more and more. If you look at Coinbase, and I know, a lot of Bitcoin maximalists won't like the opinion, but they are trying to align themselves with, I guess, more the traditional finance system, but also, they're looking at trying to align themselves with what the government wants by putting a face to the account. Now, as you can see, I've just put a couple of statistics there as well, but realistically, this is the one that's important. Just in the UK alone, there's 2.3 million consumers that hold crypto assets. Now, as a population of less than 70 million, that's 3 to 4% of our population holds crypto assets. Now, if you take that on a global model, I think there's 8 billion people in the world, you can theorize that there's hundreds of millions of consumers that at this moment in time hold crypto assets in one form or another, and that will go. So regulation is going to play a huge part in the coming years. And you have to decide what side of the fence do you want to be on. Now, Crowd4Angels has always been on the side of, we are happy to collaborate with you. We are happy to give you information. And we've always, from the beginning, taken unusual steps. Things like KYC, investment authorization, AML, these checks were always mandatory from 2014. And even when we've done token sales, we took that unusual step of saying, look, yes, you can buy with your Ethereum wallet, but no, you can't be unknown to us. You have to register. You have to go through a KYC process. You have to go through the standard legal agreements before you can get involved. And there's good reasons for that. But realistically, what it also comes down to is a bit of protection for both parties. We know who we're dealing with, and they know that they can trust the party that's assisting them. Now, I'm not going to stay on to regulation too long. I really wanted, as I said at the start, to talk about why businesses are looking to the blockchain and then introduce a case study. So here's some of the information about making the jump. First of all, why are companies opting for the blockchain? Well, international remittances are a fraction of the cost. And the user case I'll bring in later will demonstrate that very clearly. Furthermore, we see end-to-end transaction recording. There's no other technology in history whereby you can see this person transact from A to Z, and that is public information. If you look at banking at this moment, if I say I've transferred funds to an account, I have to trust that the bank has done that. I have no evidence that that has happened. And this is really where blockchain has its fundamental benefit over a lot of different systems. And then I've just added a couple more. So automation at multiple steps, with smart contracts. There's an open market. You can access international markets, and it's transparent. Again, you can always look at the records. But what's stopping companies being involved, I think, is, first of all, it's a very early stage technology, and there is a lack of understanding. If you talk to the everyday shop owner, will they know what Bitcoin is? Will they know how to accept payments? Will they know how to convert it into a fiat of their desire, or keep it in a stable coin, for instance? And secondly, I think there's also this real mindset that everything in crypto is linked to a game. You have to make money if you're in crypto. And that's actually incorrect, because a lot of what the interesting side of blockchain is about building those fundamental architectural structures and eliminating blockages. The case study I'll go on to later will show you a little bit about that, but that's where we need to try and change the mindset, not just to talk about the gains, but also to talk about the real world user cases. And I think the last one I'll just stop on is there's no single market leader at this moment for solutions. Now, I'm going back to 1995 when I had my first PC, and it was a Microsoft, and Microsoft's still here today. They power, 80% of operating systems. They, have a suite of products or software that people can use, such as Word, Excel, PowerPoint, and the world over knows Microsoft's name. And I think we haven't seen that yet. We shouldn't expect to see it, but it's trying to find a suitable company who's going to work in everybody's interest. Yes, for a profit, of course, but what is that company going to look like, and what is it that they're going to do? Is it simplifying wallets? Is it creating systems, etc.? So that's always something to look at. And when you're thinking about the products that you should create, try and think as large as possible, but then simplify what you're needing to do. So the real life user case here is really what I wanted to talk about. And this is a real life user case. This happened a number of years ago, and is one of the reasons I wanted to talk about blockchain, because I think it has a fundamental impact on the end user. So there was an Australian gentleman who registered for Crowd4Angels. He wanted to invest in a company, and to do so, he transferred £100 to Crowd4Angels. By the time the funds had been received by our bank accounts, we only had £85 remaining. So you can see there that the person has lost £15 or 15% of his investment. Now, that might not sound like much if you're doing it at £10,000, £100,000, etc. But when you're doing small transactions, as very relevant to crowdfunding, that loss of £15 represents a huge impact on your investment. You think if I invested £100 in a loan, I might make 6%, 7%, 8%. Well, if I've lost £15 by transferring it, I've already lost 2 years yield. And that is, I think, what traditional banking struggles. Now, in this case, actually, what you don't see here is that actual man withdrew the £85 back to his bank account and lost another £15. So by the time he'd done a round transaction, he only had £70 worth of value, and the £30 was retained by the banking system. Now, as I said, we did introduce a blockchain solution, and we used a platform called Coin Payments. Back in 2016, they were quite early on. They offered the ability for individuals to effectively transact a particular amount of capital and convert it into fiat. And as you can see, that same male who transferred £100 for CFA using the Bitcoin network and banking fees, and I want to clarify that there are banking fees still in here, it only cost £2.30. So his value remaining was £97.70, which means he's only lost 2.3%, which is a huge difference from that first example of losing £15. And actually, here's the transaction. So I wanted to show you that it was real. As you can see from the image, the BTC fee was only 19 cents. So the blockchain fee was horrendously low. Where the fees were actually taken was on the banking and the traditional service line. So there's coin payments, 50 cents, and Coin Motion, the European partner there, was €1.80. And that was broken up into two sections. So 90 cents of a euro paid their fee, and then 90 cents paid the withdrawal fee to come into our bank. But you can see again, if we just go back to that same slide, £15 to £2.30, it's a huge difference. I mean, it's 5 or 6 times less than the fees paid in traditional banking. And I would say even in today's standards, that is quite high. So let's pop on down a little bit. And I wanted to talk about the user journey of that gentleman. Now, as you can see, I've made it quite simplified. And if anybody wants to talk afterwards or see screenshots of the system or discuss the system implementation, I'll go through that at a greater length. I think that gets quite technical. But here's the ideal journey. The user initiates the website. He tells you how much he wants to pay. The user then is sent to a portal with the wallet address. The user sends the crypto received, and the payment's confirmed, asset issued. And you're seeing this very often, using Lightning Network or Ethereum, or even, the Binance Smart Chain. I used Solana the other day. So this sort of methodology is quite understood. But in reality, what it looks like today is that we then have all these additional steps. So when we say the user sends crypto, it's not as straightforward as that. Actually, he has to open MetaMask, he has to enter an amount, enter an address, reviews and chooses the gas fee, confirms, and then broadcasts to the network. And as we all know, anybody who's had experience in this sector, if the feed's too low, the transaction fails. If it's received after the window, the transaction fails. If there's not enough funds, a second payment's needed. And if there's a wrong address or scam, funds are lost. And of course, certain networks, certainly, things like Ethereum, have high gas fees. Now, that was talking about the user, but what happens at the back end for the company is also important. And I don't want to go through all of these steps because I know you can read them, but I wanted to focus on this little bit here and the problems that we still currently face. And I think it really comes down to this, and it's the fiat off-ramp. Any transaction that we currently do in crypto, everybody still has in their mind that it has to come into some sort of fiat. So whether I'm a small shop, yes, the person's paid in Bitcoin, but what can I do with Bitcoin? I can't go to the wholesaler and buy my goods. I have to sell the Bitcoin, receive USD, GBP, EUR, and utilize it. And as you can see, just by the asterisks next to these, there's a fee charged for all of these transactions. It makes it very expensive. But just as a few other points to make in here, you've also got to consider market movement. We're talking about BTC in this transaction, and yes, Crowd4Angels use BTC as its main currency. BTC can move wildly. And if we leave a window of opportunity open too long, I can either make a good gain or I can make a big loss. And it depends who's then going to pay for that change. As well, when I mentioned about regulation and Binance, think about the merchant changes. Binance personally affected me here in the UK because they closed the GBP payment gateway. That means for me now to withdraw GBP, I have to sell into Solana, send Solana to coin payments. I then have to sell the Solana into GBP and withdraw it. All these additional steps adds fees. And I think what people see with OpenSea, NFTs and things of that nature is the cost of transacting is ridiculously high or very complicated to not guarantee an end result. Remember, if it's not broadcast, you've lost those fees. Now, I know our time is running out, so I'm just going to go through this a little bit faster, and then we can answer any questions at the end. In terms of the company journey, these are the reasons I think that the main benefits are. One, speed. One transaction confirms the broadcast. And I know lots of people's, when they transfer funds to exchanges, they're waiting for 20 confirmations or 40 confirmations. In Crowd4Angels' eyes, once we have one confirmation, that's ensured the payment is guaranteed. It is broadcast to the network and we will receive the funds in a period of time. Secondly, data. Now, I know I showed you a Blockchain Explorer page earlier showing the transaction, but you can also look at that data in a greater depth. I know some people call it data mining, etc. But if you're looking to learn about your users and assist them, you can see the value of the average transaction. You can see the value of the person who's holding the wallet. You can look at the data and utilize it in your product. Thirdly, self-custody, and this really is great for places like Asia and Africa, where you can see the removal of bank accounts. Now, if you think about what's just happened in El Salvador, I think they mentioned that 30% of El Salvadorians didn't even have a bank account. So introducing something that can be held on their phone and in self-custody reduces the need to have those, as I said, banks or institutions in the way to allow a transaction to proceed, and again, reduces cost. And finally, transparency. You can look at this in very many ways, but the example I would say, again, is when you're transferring funds to another party, you have to trust that they are telling the truth, that they've been received. And in many cases, I'm sure we've all had examples whereby somebody has said that it hasn't been received, but you are absolutely confident it has. Well, with blockchain, we get rid of that permissionless issue, and suddenly you can trust what's being shown on the system. Now, here's a couple of sticking points to the user, and I think it's really better to focus on the user, not the company. Remember, the user is the person who, at the end of the day, is using the product. First of all, simply getting a wallet is quite difficult. I'm going back to days when, you had to run a full node and you had to be synced to be able to transact. I mean, it's a lot easier now with mobile phones and things of that nature. But, think about your grandma, think about your mum and dad. I mean, my grandma, for instance, doesn't trust an ATM. She will not go to an ATM. So how are you going to get her to use a blockchain product on a phone to pay for her goods? And even my parents, they do use ATMs, but they're not really enthusiastic about mobile payments. And it's trying to build products and services that suit their needs. Secondly, fees. Who's paying for it? In the example I showed, it was 2.5%, but we have other blockchain fees where it's gone as high as 7%. Now, Crowd4Angels has actually covered that for the time being, but you can imagine if you're really focusing on the margins of a business, high fees cause problems. And then a few more, I think, you can read, but what chain's being used? Is it ETH? Is it Binance Smart Chain? Is it Tron? Is there a consensus? And I think the big one here, FUD marketing. We've all heard the FUD. It's not secure, it's a scam, it's used to buy drugs. It's madness, really. 95% of us work legitimately and we want to build products of the future. We're not interested in buying, cocaine from some guy on a tour market somewhere. But that's what the media has us believe. I mean, you can also look very recently at El Salvador again and see that there's sort of two sides of the argument. Those that don't accept Bitcoin are being presented by Wall Street Journal and people of that nature, and those that accept Bitcoin are being promoted in online blogs. It's trying to get the mass media to accept it as a form of product. And there's my guy pushing the boulder at the hill, because all of you will have to do that. I've been stuck in crypto now for 7 years, and it's been a long 7 years, that's for sure. Okay, glimmer of hope. I think this is important to take on board. Obviously, we are now seeing layer 2 and layer 3 solutions. Things like Lightning are very important to the market. We are also seeing companies focusing purely on UI, UX. As I said, phone apps have come a long way. So even Binance used to be quite difficult. It's a lot better now. And we are now starting to see products utilize words instead of random characters. And I think that helps in terms of not only remembering your account, but also, again, making it more human. A 42 hexadecimal line is very difficult to remember, but 3 words is a lot simpler. Now, we're just going to finish off quickly, but what I was saying is really we are in this Ask Jeeves stage at the moment. It might not sound like that. I know, the Bitcoin white paper has been out for over a decade, but we're still very early on. And as you can see, there's always development over time, and we will see that in future years to come. Now, security tokens, I did just want to touch on this because obviously Crowd4Angels has a specialty in this market. Loosely defined, we're talking about financial asset on the blockchains, such as equities, bonds, entitlements, properties, etc. What's the big deal? Money. And that's true. I mean, that's what makes the world go round. It's worth something, and the securities market is in the tens, hundreds of trillions of dollars. So if you can even take a tiny chunk of that, it can be very valuable. INX securities, for instance, they're worth something like $300 million today. And I would say they're not doing very much. So you can just think if they're not doing very much, when they get it correct, they're going to be worth quite a lot. And the sticking point there, and it goes back to that first one, I think I should have really highlighted and put this in bold, built it on a plane yesterday, is the KYC. Who is your customer? I think that's fundamental in our industry. Is the first question you should always start with, who is your customer? Can you prove it? The FCA, the institutions, the police, they don't care about what you say. They want to see paper. They want to see something, and they want you to be able to verify. And that's always important to do. So that's it. I know we've rushed through a lot of these things. And if you wanted to know about a few of my future predictions, here you go. So we're going to see more crypto-to-crypto stablecoins and getting rid of these fiat off-ramps because, quite frankly, I hate fiat off-ramps. Email address style wallets and the use of custodians, very similar to banks. Cross-chain transactions, yes, you might be using Binance Smart Chain, but you need to do sync on Ethereum. It'll just do a cross-chain transaction. And finally, I think we are going to see a KYC coin. It's not been done yet. It's been mooted for years. Civic were one of the first in 2016, 17. But I think that's going to come. So thank you very much for taking the time to listen to me. I did waffle on a little bit, but if you want to have a conversation with me, have any questions, and if you do want to see that payment system, the coin payments going to CoinMotion and then being withdrawn, I'll happily do that at a separate time. It gets very technical, and I think there's better ways of doing it now, and we've done better ways. So thank you.
Thank you. Thank you so much, Andrew. That was a great, informative presentation, I must say. And you heard it first here, the predictions. We do have a couple of questions. Till then, I'll post your email address, and I believe that's your Twitter handle, isn't it?
Yes. Okay. If you go on to Telegram and type in Andrew Adcock, you'll probably find me as well.
Okay. There you go. That's posted in the chat. Other than that, we have a couple of questions we'll take. Someone asks, with the aim of Bitcoin to act as a global currency, would it be possible to regulate it at all? Since to regulate it, one would have to denounce their own currency, which wouldn't be supported by many nations.
That's a very good question. If you're a fan of what Bitcoin did next, the podcast, I would say no. You can't regulate Bitcoin. And actually, I think trying to regulate Bitcoin would be the mistake. It's regulating the firms that utilize the layer 1 technology. But as a wider consensus, actually, I think you're going to be looking at layer 2 solutions like Lightning, and who utilizes Lightning for their clients as the regulated party. Trying to stop Bitcoin, madness. We're a rolling hill now. I think we've really gained some momentum, in the next 5 or 10 years is going to be exciting. I haven't sold any Bitcoin now in 3 years, and I just won't, because I'm so convinced of the narrative that you've got a base layer. I think that's the critical thing. Bitcoin is a base layer. You can then build on top of it and really introduce some exciting technologies. Lightning is wonderful. Commerce Block, they do side chains. There's some fantastic technologies out there, but you can't regulate it. Not the Bitcoin. You can regulate the firm that wants to interact.
Yeah, exactly. Right. Next, Shubham asks, what do you think of different tokens being created on every single project and getting listed?
Is it? Can we swear on this? I don't know. But look, the reality is that I am a bit more of a Bitcoin fan. I know I sort of grew up more in the Ethereum age, and I think Ethereum's got a great job. And I think if you look at technologies such as Mina, there are interesting coins coming to the market. I think there's also a lot of clone projects. You know, I'm not a fan of Tron. I'm not even a big fan of Solana. I think the simple size of the network is going to be too large. I think Ethereum's got that problem. You know, you can't run an archival node anymore. You have to run a light node. And that defeats the purpose in some ways that you have to rely on the trust of another entity. But, you know, new products and new coins, they allow people to think. And I think if, you know, we're all here today to learn, we're here to collaborate, we're here to create. And so someone like Mina that's trying to focus on a 22 kilobyte blockchain, that's an interesting thought process. Is how can you cram all the data into just that tiny little byte? And could Bitcoin learn something from that? Now, of course, Bitcoin as a whole, you know, it's only about 300 gigabytes at this moment in time. Of course, as it swells and grows, it'll probably get in the terabyte region, and that's tiny when you consider web server capacity and things of that nature of Amazon per se. But I think that's a good place for them. I think we're still learning. We do need to see new currencies. They're just going to do different things. And that's where I think that cross-chain projects are really interesting, because having that base layer of Bitcoin, how do you then interact with it with a different chain? I think that's where I'd look at now, cross-chains, rather than having more base layers.
Okay, perfect. We'll take just one last question before we wrap it up. I think Jason asks, with big banks and institutions entering the crypto space, what regulations can be applied to protect the little guy from large-scale market manipulation, especially when banks or institutions can remain anonymous on the blockchain by taking the right precautions? Is this where security token regulators come in, you know, digital security regulators come in?
Yeah, I think what Jason's pointing at here is that you're right. What stops, you know, Barclays churning out another entity, buying up lots of Bitcoin and manipulating the marketplace? You know, there are regulations already in place for this. The reality is, when certainly firms like banks do these types of transactions, they have to have a paper trail. I mean, we're not going to be able to protect everybody now. What I would like to see, Jason, in all honesty, is regulators like the SCA actually reverse engineering some of that information that they receive from the blockchain. You know, we all know where the APIs are. Why can't the regulators plug into the APIs, look at the data that's coming through and seeing what's going on? Now, of course, you know, there's things like on Twitter, the whale alert. Well, is Barclays the whale? And if so, can we track that? Can we see where they transacted, where they sold the crypto? Could you then approach the firm that they sold it through and find that information? So there are regulations in place to do it. It's just a case of getting the information. I think that's where regulators have been particularly slow, is that they're not using the technology infrastructure already there. You know, they're not accessing APIs. They're not looking at blockchain explorers. They're not following accounts like whale alerts to see when these dumps come, how did it happen, and then actually going for an information request. Because, you know, if I sold 1,000 Bitcoin today, I'm sure, you know, they could find out who I was, because it's going to happen through Coinbase, and Coinbase, quite frankly, could pass my information away. I'm not afraid of that, but, you know, that's what I'm saying. That they have the regulation in place. They just need the information. And on that, I would say to everybody here who's listening, don't see the regulators as a threat. They can also be your friend. If you feel that you've been fouled, then, you know, go and speak to someone. Go and speak to an authority and say, look, I was, you know, scammed here. And then they can really take a note of the issue and try and do something for you.
Great. Oh, that's great. I believe that's all the time we have. Thank you so much for coming in, Andrew, and for the presentation that you made on a flight. I believe it certainly didn't seem so. It was great. Thank you. Thank you for coming in.
Not a problem at all. And I hope to hear from some of you soon. Thank you.
Yeah. That's all we have for this session, guys. The next session, folks, is at 2 p.m. In 10 minutes. We're speaking with Edgar Murao, and he talks about the inception of FujiDAO at a hackathon. So whosoever's participating in our hackathon next, I believe this could be inspirational for you. We'll see you all in the next 10 minutes. Thank you.
Thank you.